You see these headlines flashing across your screen, right? The story seems pretty clear-cut. But if you look underneath all that noise, the financial markets, well, they're telling a completely different story. So today, we're going to decode that story and figure out where the smart money really goes when tensions are on the rise. So let's kick things off with the big question that really shapes every single market decision in times like these. When the headlines are screaming crisis, what do the markets actually hear? Is it just a warning to run for the hills? Or is it a signal of something else? Maybe even a unique economic opportunity? Okay, here's how we're going to break it all down. First, we'll get into the economic paradox happening inside Iran. Then, we'll look at the strategic position of the US dollar in all this. After that, we'll see what the market charts are telling us loud and clear. And finally, we'll scout out the next economic fault lines to watch on the horizon. All right, first up, we've got to get our heads around the deep contradictions inside Iran's economy. And look, this was a situation at a boiling point long before the latest headlines. It's a classic case where this public image of strength is masking some really severe hardship behind the scenes. And this is where it gets really interesting. On one hand, you have the official story of national unity. But on the other, you have the harsh economic reality for everyday people who are just trying to stop their life savings from literally vanishing into thin air. The numbers behind this are just staggering. Think about it. Since 2018, the average inflation rate in Iran has been over 40%. That isn't just a number on a spreadsheet. It's a force that is relentlessly eating away at the value of everything you work for every single day. And what happens when inflation runs wild? Well, their currency has pretty much collapsed. In just a handful of years, the Iranian rial has lost over 90% of its value against the US dollar. So it's really no surprise that so many people are turning to crypto or secretly hoarding physical dollars, anything to escape their own government's policies. And here is the key to the whole thing. To understand Iran's economy, you have to understand the Revolutionary Guard. See, you have to think of them less as just soldiers and more like a massive corporation that controls about half of the country's entire economy. They're running the show on oil money, crypto mining. They're the ones getting rich, and that wealth almost never trickles down. Okay, so now let's switch gears a bit. How could all this chaos in the region actually end up making the US dollar stronger? It sounds kind of backward, right? Well, let's dig in. It really all comes down to this one critical spot on the map, the Strait of Hormuz. It's one of the world's biggest bottlenecks for energy. Whoever has leverage over this waterway has a huge say in global energy prices, and by extension, the currency that all that energy is traded in. And this really gets to the heart of why the dollar is still king. It's all about trust and freedom. The dollar is backed by the free movement of capital and the deepest bond markets in the world. The Chinese yuan, on the other hand, is a potential competitor, sure, but it's held back by strict government controls. I mean, think about it. You can't be the world's piggy bank if people are afraid they can't get their money out when they want it. It's that simple. All right, enough theory. Let's look at what the markets are actually doing. Let's cut through the noise and see the hard data. So what is the market's final verdict on all this? First up, the S&P 500. You look at Wall Street's big benchmark, and it barely flinched. Yeah, there was a little dip, but it bounced right back to near all-time highs. The message from the market is crystal clear. This conflict is not a major threat to the US economy. And you know what? It's a pretty similar story with Bitcoin. It didn't just recover from that first shock, it's actually climbed higher. This so-called digital gold, this risk-on asset, it basically passed its stress tests with flying colors. The sellers got tired, and the market just moved on. Okay, but what about oil? I mean, that's at the center of all this, right? Well, even there, the futures market is telling us the price spike was just a flash in the pan. That downward curve you see is basically the market shouting, this is a temporary blip, not a long-term crisis. So why is the market so chill about this? Well, there are actually some really solid reasons. For one, when you adjust for inflation, the real cost of oil is way below the panic levels we saw in past crises. Plus, the US economy just isn't the oil guzzler it used to be. And here's the kicker. The US is a net energy exporter now, which gives it this unique shield against global price shocks. This quote just nails it, doesn't it? While the starry headlines had everyday investors selling out of fear, the insiders, the people who know their companies best, were quietly buying things up. They saw an opportunity where everyone else just saw risk. It's a classic Wall Street story. Okay, so if the market's already looking past this conflict, what's on its radar? What are the real economic hotspots we should be watching that could cause the next big tremors? Well, one huge one is what's going on with China's industrial subsidies. The amount of government cash propping up Chinese companies absolutely dwarfs what you see in the EU or the US, and a lot of people see this as creating a totally unfair playing field in global trade. And this fight is definitely not over, not by a long shot. And sometimes it's easy to forget that geopolitics often boils down to something really simple: economics. Take Pakistan's recent push for de-escalation. On the surface, it looks diplomatic, but it's actually being driven by a huge crisis at home. They have a massive natural gas shortage, which means rolling blackouts. So their push for peace is really a push to keep the lights on back home. It's that critical. And all of this kind of brings us to our final crucial question. The big takeaway here is that financial markets often operate on a totally different wavelength than the news cycle. They're trying to look past today's breaking news to the fundamental economic story underneath. So if they're ignoring today's headlines, what underlying story are they truly focused on for tomorrow? That's the question worth thinking about.